The Bay Area housing market is getting even more competitive as home values continue to grow and inventory shrinks. According to the California Association of Realtors, prices rose 18% in November, and that's compared to the same time last year. Nicole Bachaud joins us now. She is an economist with Zillow. Now, first, the winter months are typically when home sales slow down just a bit, but this year you say the Bay Area housing market is as hot as ever. So why is that, and is it just the low interest rates?
So yeah, we're definitely seeing things warming back up and defrosting a little bit sooner than we typically would in a normal year. We're seeing monthly home price appreciation not slowing as much as we were anticipating. And that annual appreciation, as you mentioned, is still incredibly high. Bay Area is looking around 17% yearly appreciation in November for home values, which is a lot higher than usual. That's even with, there have been some increases in inventory in San Francisco and Sacramento throughout the last year. But that just wasn't enough to really curb a lot of those prices. Low mortgage rates are definitely keeping demand high. However, even as those start to tick up, we're still going to continue to see really high demand and really hot home prices, as there's just not enough inventory that's going to be able to keep up with all of the people trying to buy homes.
Okay, so let's start in Santa Clara County then. What are homes there typically worth these days, and how does that compare to last year?
So I don't actually have Santa Clara County data in front of me right now. I can pull that if you'd like. But in the Bay Area, we're looking, homes over around, 1.2, 1.3 million as the typical home value, which is a lot higher than it is elsewhere in the country. And so these 17% appreciation numbers are just incredibly high at that level of price.
So you have these low interest rates, and then you have the demand on the market these days, but obviously not a lot of homes are out there and available for people looking to purchase.
Yeah, definitely. With the low inventory, we just don't have enough homes on the market. And that's been a problem for the last decade plus. At the end of the Great Recession, builders stopped building homes and they never really picked back up at the level they were before. And now we have millennials coming into the market trying to buy their first homes. We have a lot of boomers that are downsizing and transacting in the market more than they have in the past. And we have all of these people in the market at once, and there's just not enough supply to get there. And so we really need to work on adding new inventory as well as focusing on getting more existing homes on the market.
So what about the rental market? How much are renters paying these days?
Renters are paying a lot of money. We did see early on in the pandemic rents in the Bay Area dropping, especially in the most expensive parts. And that was just a result of people, leaving the cities, and then we didn't have as many people coming into the cities with shutdowns and restrictions and whatnot. Now that the economy is back and reopened and we have amenities back in urban areas, we're seeing rents starting to pick back up again. However, in the Bay Area, we're not seeing them rising above the level that they were pre-pandemic. And so we still have some ways to go before, we break through that pre-pandemic price level. But we are seeing rents rising at around 8%, 8 or 9% in the Bay Area right now.
So it's almost like a rental payment might even be equivalent to a house payment with these low interest rates. But, the cost of these homes are very high. What's the future of what the inventory and the rental market looks like here in the Bay Area?
Yeah, so as you mentioned, rents could be the same price as a mortgage, but really the big trick there is the down payment. And that's a huge problem, especially for folks in really expensive areas like the Bay Area. Even with high enough income to be able to afford a mortgage, coming up with that down payment is going to be really tricky. And so we're going to see a lot of folks sticking around in the rental market for longer than we would have otherwise. And that's going to put a lot more demand on rents. We're going to see rents starting to rise. We're going to see rental demand going up in the next year as people are aging in the rental market and looking for larger rentals as they continue to stay there for a longer period of time. We're also going to continue to see inventory staying low, but picking up a little bit throughout the next year as we have, some new construction coming onto the market and some more existing home sales as well. But it still is not going to be enough to really curb those prices. We're looking around 10% appreciation in San Francisco and San Jose throughout next year.
So, Nicole, what about the overall trends are you going to see in this housing market? Are more people maybe moving out of the city into the suburban areas because they now have the opportunity to work from home more? What are things looking like?
So we were seeing at least earlier this year, a lot more demand for areas that are further away from the urban centers. So we looked around a 60 to a 90-minute commute to that job center in San Francisco is where we're seeing the most growth happening. And we did see the least growth and even some negative growth happening in home values in that, downtown core area to within a 10-minute commute of the job centers. And so, that's definitely a trend as people are detached from their physical workplace. They don't necessarily need to consider a 5-day commute anymore. It might might be 1 or 2 days a week, and they can kind of balance that out with the 60 to 90-minute drive can fit a lot better with that schedule.
Any overall predictions for 2022? Like, do you think things are ever going to cool down at all?
Yeah, so we're still going to see a really hot housing market in 2022. As I said, Bay Area is going to see around 10% yearly appreciation. Nationally, we're expecting next year to end around 14-ish percent appreciation. And so it's still going to be really hot, but it's going to be nowhere near the levels of 2021. It's going to take us a while to get back down to those kind of more normal, a cooler housing market, if you will. Inventory is still going to be playing a big role in that, as well as the demand for affordable homes. So we're going to continue to see a lot of the movements and shifts within markets towards more affordable areas.
All right, I think I need to hop on Zillow and check my price of my house right now. All right, Nicole, thank you so much for joining us.
Thank you so much.